And so we believe very, very firmly that anyone can be an entrepreneur.
If you just bought and held the top 10 stocks from today and you held them for 10 years, I guarantee you'd more than double your money in the 10 years.
Wow.
Hello, everyone. Welcome to this week's Wealth Within Update. I am Jim Beach of School for Startups Radio and joined, luckily this week, by Janine Cox. She is the Senior Investment Analyst at Wealth Within and sitting in for normal Dale Gillum. We appreciate the upgrade. How are you doing today, Janine? Good to talk to you again.
Good to talk to you too, Jim. A bit chilly actually here. I've had to have the woolens on all weekend actually.
Oh my goodness, we're the exact opposite. It's a hot, burning summer here in America. Is the news of our continued riots still front page news for you? Is our stupidity still dominating your news?
Yeah, actually, I saw on the weekend someone was shot by a policeman, so I thought, oh my goodness, yeah, so it is very much front and centre still, and that was a bit shocking to see some footage of that.
Yes, horrible. Right here in Atlanta where I live, so just a horrible situation. So, Janine, last week, you and I were talking, and I said I didn't understand how the market was responding to what I saw going on. And finally, this week, I feel vindicated, but I also know that if you flip a coin 5 or 6 times, eventually you're going to get the right result that you want. And I think that's finally what happened. I was wrong, I think, 5 weeks in a row, but this week I am right. And I hate to say it, it's because the market went down.
Yes, Dow Jones 25,605.5 points, down 5.5% last week. Up on Monday, actually, which is what I expected, up for the start of the week and down for the rest of the week. We saw a drop of 6.9% on Thursday, which was interesting. And so I was going to announce that you were right and you've graduated from your L plates to your P plates this week. Well done.
Well, a lot of our listeners won't know what that means. Here in the United States, we don't do that. But in Europe and Australia, an L is your learner license, and you put a big L on the back of your car, right?
Yep, L for lunatic. Mm-hmm.
Lunatic. All right. And then what does the P stand for? Pass?
Probationary.
Probationary. Oh, great. So I'm on probation right now?
Yeah, so for other drivers, it means just watch out. Watch out for those crazy people.
All right. Well, that is appropriate for me, I must say. All right. Let's dive into some of the things you saw last week. What sticks out?
Yeah, look, actually, Dale and I were having a chat about an article by a guy by the name of Stephen Roach, who's a faculty member at Yale University. Now, he's expecting the US dollar to take a big dive. Now, he mentions that in the first quarter of 2020, net national savings, which includes depreciation-adjusted savings of households and businesses, the government sector fell to 1.4% of national income, which is quite low. Now, by comparison, the report indicated that from 1960 to 2005, the average was actually around 7%. So US GDP dropped 5.5% for the quarter that was the first quarter, on the back of 2.1% last year. Then the US federal budget deficit's likely to soar to a peacetime record of around 18% of gross domestic product in 2020 before, he says, hopefully receding to 9.8% in 2021. Now, this is all bad, sounds like negative news, and I don't like to be the bearer of negative news, but further to that, US trade deficit's likely to widen, and he forecasts that the combination of all of these factors are likely to see the US currency drop significantly this year or next. Now, all of these people can have forecasts about what's likely to happen. It'll be interesting to see what plays out. But I was looking through some data in addition to this, just to find some sort of point of difference to see what was going on. And a person by the name of Jennifer Rubin from a site called Statistica She mentioned the personal savings rate in the US was 7.6% in 2019. Right, this is interesting, compared to 10.4. So you guys seem to be reasonable savers. This was back in 1960. And then in April 2020, with everything that's going on with COVID, there was a sharp increase to 33%. So, you know, without all the extra spending that people generally make when they go down the street shopping, restaurants, etc., that discretionary spending, it's all going into bank accounts by the look of it, which is really probably a good thing at the moment.
Well, I was listening to some bald stock guy giving me advice for my financial planning, and he said pay off debt. And so that's what Dale told us to do 3 months ago, is to pay off debt, and I actually did. And I always feel like I'm a barometer of what everyone else in the neighborhood is doing. If I'm doing it, surely millions of other people are too. And both my wife and I used some of the stimulus money, some of the extra money we didn't spend at Cheesecake Factory. We did pay down a little bit of debt on that. So
your
we're even trying to.
Your budget at the Cheesecake Factory is quite big then.
Yes, well, of course, you know that. And another thing we did is we were using the very low interest rates right now to consolidate 2 mortgages, a primary and then a secondary rental, and put all of that onto the primary because the rate will be a little bit lower there. You know, already historic rates low, but then make it even a little bit lower, a quarter point or something on the portion that covers the secondary. And so we're trying to do that responsibly, and we're taking a little bit of money out of there to pay down debt in other places. Yeah. So several different ways.
What's interesting is that people are, okay, like you say, potentially paying down debt and increasing their savings. So while government spending's going up, we're seeing the consumer spending dropping, and we're seeing personal savings go up. So I find that fantastic to see that people are actually, because there was this talk about that people are just going to pick up and start spending like crazy online, and I don't think that's happened. Have you seen anything about that?
Well, no, I have seen that. I saw that. I don't want to quote something that's inaccurate, but that in one particular period, a weekend or something, that it had surpassed all of the Cyber Fridays, the special cyber weeks that they do in the summer. All of Amazon sales on one day surpassed 5 or 6 of the biggest days previous to that. So spending there is certainly up. I think it was, $50 billion in that one day that was purchased or something like that. So yeah, we're spending more online for sure. That data is out there.
Well, what the retailers are worried about now is that it's much harder to get people to come to the shopping centres. And even though we've seen pictures here in Australia and in the US of people going back to the shopping centres and the malls in the US, that people are doing so in a very tentative way, and it's not going to be like what it was before. So even with sales, 50% off sales, you in Australia you would see hordes of people lining up to get the discounts from these sorts of sales, and now they're saying that that's a thing of the past and people are doing needs-based shopping when they go out.
Yes. Well, I did go to the mall. Dale and I have been talking for months that I was dying for a new computer. And so I went online and tried to purchase it. And the wait was, I don't know, 5 or 6 weeks or something, but they had one at the mall. And so I went to the mall, and it was a horrible experience. I don't want to go back there. I didn't like it in the first place, and it's even worse now.
In what way was it horrible?
Here's the main thing. It felt like you were someplace that you weren't supposed to be.
Yeah, strange,
like you were at the principal's office in the weekend. You broke into the principal's office in the middle of the weekend. That's what it felt like.
Yeah.
And so anyway, we need to move on. There's some particular stocks that you wanted to talk about. Oh, no, wait, no. I got to ask this. So if the dollar does fall and plunge, what are the responses I need to be thinking about now, thinking that may happen? Does that mean that I put more money into an international fund? pull a little domestic and put it international? What are the steps in advance?
Look, it's always about putting your money into things that you know. That's the first thing. Never put your money somewhere that you don't understand all the factors, and it becomes a much broader category to look at and to understand for investors if they start looking more further abroad. And I think that Americans, being so patriotic, are going to be looking at, well, what can we invest in here? Because there will be more about the haves and the haves not. So there'll be sectors that will benefit, like you just mentioned, the Amazons of the world. Some of the tech companies, there are going to be incredible breakthroughs. I think through this adversity, the technology will just shine through. So it's about looking for where those opportunities are and doing your research always. So that's what I'd say at this point.
All right, Hertz.
Now, Hertz.
Let's talk about Hertz.
Hertz bankruptcy.
Hertz rental car.
Yeah, and capital raising. Now, you can understand that the car companies are right in the firing line for what's happened with COVID. A $24 billion figure in debt, that was what they announced. $1 billion in cash is what they had. The stock price, what grabbed me was that the stock price shot up by 590% from the low in May at around 40 cents, and this was the all-time low for Hertz, so you'd think, over the years it's been falling, you think it's surely not going to go lower, but COVID really pushed it through the floor. I actually had to take a second look when I was looking at the chart to see whether it was right, a 590% rise. And for comparison, just for your viewers, August 2014 all-time high was 125.66 US. In February 2020, the high was actually $20.85. So think about that. And I think the lesson here for investors is never think that a share can't go lower, because so many have done this during COVID and keep falling to make new lows. Now, Hertz filed for bankruptcy on May 22nd, and the court approved Hertz to raise $1 billion by selling shares. So that's interesting that they've actually allowed Hertz to go and do that when it's a high risk situation for any investor. So with this type of investment, it's massive in terms of speculation, and investors really need to be aware. And it's not the sort of thing that I think that investors should be putting their money into. When you want to buy shares that are going up, not shares that are risky and potentially could just do a backflip and fall away again. So who knows whether Hertz are going to be successful. I hope they are, because I don't like to see good companies go down the tubes or go the wrong way. And there's a lot of investors that probably were hanging on. And what investors need to realise in these situations when companies do go into bankruptcy is that they will fall back in line. So they'll be standing behind plenty of others in the queue to put their hand out for funds. So the bondholders and the creditors, they are repaid ahead of shareholders. So in these situations when investors hear about big gains on stocks, greed tends to take over. So it's not about logical decisions, it becomes emotional. So the key for investors is really to be careful and not get caught up, because where you make your money over the long term is not going to be on these one-hit wonders, if you like. It's going to be through proper practices and investing in a structured way with proper money management and risk management into good quality stocks.
See, the rumor here is that everyone who owns a share at the end of the day gets to choose a car. So I guess that's not true, huh? We don't just get to go to the Hertz parking lot and take one, huh?
No,
anyway,
that's right. Mm-hmm.
One more stock, Cheesecake Factory. I'm doing everything I can to support the company.
Is it showing around the waistline? Yeah. Look, I mean, I love cheesecake as well. I've never actually been to the Cheesecake Factory. What else can you eat there?
Oh, it's a menu that's probably 50 pages long, and it has every food you can think of on there. Nachos and hamburgers and delicious seafood and steaks, and the thing about it is that it's a joke that there's so many things there on the menu. And the design is always really strange. It has Egyptian columns, but then Greek design on an Egyptian column with French ornamentation. And you look at it and you just go, blah, blah, blah. But the drinks are really good. The Mai Tai is the best Mai Tai that I've found. And I'm a Mai Tai connoisseur. It is official. It's the thing, you know what you're going to get. It's always going to be good. It's reasonably priced. It's a wide selection that makes everyone happy. And I'll be honest, my family and I have never eaten a piece of cheesecake there.
Right, there you go.
So anyway.
So do they have those huge burgers that America's famous for? I've watched those cooking shows.
Everything there is huge. You come home with a meal for later. Yes.
Wow.
Everything
Awesome.
there is ridiculously sized.
Sounds good. Okay, so first of all, with the Cheesecake Factory, great name, great products, obviously, and it's like a family brand, isn't it? It's just everybody in America knows about the Cheesecake Factory.
Sure,
It's probably been
sure.
there. So
You go there on a special event, a thing like that. Maybe your kid's graduation, or it's a specialer place.
Okay.
But I got to think that it's an arbiter or an indicator of what the rest of the restaurant sector in the United States is going to do now.
Interesting. But will they follow that? Because you're talking up the Cheesecake Factory. The question is, will they follow that model? But the other thing is, why would you buy stock in companies where you eat at their restaurants, or where you eat their takeaway food? Now, the Cheesecake Factory, for one, it's one of your favourites, obviously, and just because you like the going there to eat doesn't necessarily mean that the investing in the stock is going to be a good thing. Now, the stock price actually dropped around 14% last week to $24.23. Expected current rise, I thought it would get to around $32.50, and it may still do so. However, it reversed last week, and the market's braced for the current earnings season and some disappointments. First quarter net loss for the Cheesecake Factory was $3.9 million versus previous corresponding period of $27 million. Now, talking about costs rising, we were talking about this last week. So additional costs for different types of service in the way they're looking after their customers, just little things like the butter you mentioned last week. They were talking about healthcare and meals for staff. That was an additional cost. 12.9% drop in sales for the quarter. Analysts actually expect a 20% fall in revenue, but who knows? I mean, based on the passion that Americans have for the Cheesecake Factory, maybe they'll get behind it and support it and think, let's order from there tonight. So they made an acquisition, actually, Fox Restaurants Concepts. Have you heard of that?
Yes, I have. I used to have a restaurant radio show, so I know all of the chains.
Fantastic.
My motto is, I will eat out 21 meals a week.
Awesome. Okay. So the bottom line impact from that purchase could be negative, and that's what they're saying at the moment, because it's compounding the impact of Corona. But the positive thing is that they've actually been backed by a big capitalist firm called Roach Capital, $200 million investment in the company, which is a positive thing for their bottom line. Dividends have been suspended. So there are all of these criteria. What is currently being said at the moment is if the Cheesecake Factory make all of these decisions, including the decision they made to suspend the dividend, then in theory they should be able to recover from this. So is it a buy right now? Well, I'd say not just yet. However, based on everything that I'm seeing about the Cheesecake Factory, eventually I think it will come up on the list again.
Well, I think the main thing is what they and Simon Properties and their other landlords negotiate on the back rent that hasn't been paid. So how are the mall companies and the big chains like this, and also the Nike stores that have been closed, and all of the other people, the companies that have locations at 100 of my malls, and they come to me and say, we're not paying rent. That's what happened with Simon Properties. It'll be interesting to see who wins that negotiation in the end and how much forgiveness there is. So I think watching I'm sorry, go ahead.
What are your thoughts on that? Where do you think it'll end up?
In the end, I believe the person with the lease, the leaseor, the restaurant always has the ultimate advantage, because you either work with me or I just go out of business and then you deal with me bankrupt. And those are really the two choices. And I think that's a fairly strong negotiating position to be in. Deal with me or I'm done. And here's my books. You can even see my books and you see that it's true. And when that's your negotiating position, it's a pretty strong one, I think.
So you think that there'll be a lot of cutting of rents across the board?
Yes. Well, yeah. The malls are going to be, I've been saying this with Dale. The higher you are on the retail or the real estate chain, the more disrupted you're going to be. The A-class 70-story skyscrapers, the 1.2 million square foot mall with a roller coaster in the middle, those sort of properties are going to be devastated, I think, by this. The strip shopping center will probably do better, because we still need 7-Eleven and dry cleaners and, hair salons and places like that. But, the Neiman Marcus, the Saks Fifth Avenue, the Brooks Brothers suits that take up 200,000 square feet.
Interesting.
That's my thoughts.
That's great. I agree with you. I think that they've got a huge negotiating position. The other thing I was thinking about too, as a consumer, I'm not a big, I wouldn't say Dale probably laugh at this, but I'm not like most people who like to go shopping. I'm really not, it's not something that I would choose to do as my first option. However, I think that if the shopping centres changed their tact and perhaps thought, okay, we can't have lots of people turn up at the shopping centre, but we can invite people. So if there was some sort of controlled way and it was by invitation, and they were limiting, because they're limiting the number of people in stores, but if they did it in a more controlled way and made people feel like they were getting an invitation to come back, potentially they might get a few more people coming out. What are your thoughts?
You always feel good to be invited to the party, no matter where the party is. And if someone singles me out and invites me, sure, I'm more likely to go. Yeah. So I also think the flavor of the mall is going to change. They need to empty the retail out and put entertainment in there, daycare for the kids or a kiddie play zone. The more they can do in terms of diversifying the opportunities to spend money there, I think they'll be better off as well. Ooh, we probably need to wrap it up. We've gone really long. Janine, you and I are too chatty. Give me an outlook for next week. Down again or sideways, rebound? What do you see?
Look, Friday was an inside bar. So when you see an inside bar on the market, it can really go either way. So I'm suggesting that potentially, I'd go with the weight of evidence and say that it could drop at the start of the week. I'd like to see it push back up towards the end of the week, even if it does fall through last week's low, which is what I'm expecting, and hopefully recovery by the end of the week. But if it closes lower, I'm not going to be surprised.
All right. Great again to see you and appreciate your time. Check out more of Janine and Dale's work at wealthwithin.us. Fantastic stuff there. Janine, thank you so much. And I will talk to, is it you or Dale next week?
Myself again.
Awesome. Much better.
Thank you.
I appreciate it. Have a great week. Take care.
Thanks, Jim. Take care. Bye for now.
Please remember that this report is an educational tool. While Wealth Within holds an Australian Financial Services licence, the information featured in this program is general in nature and therefore should not be relied upon. Before making any investment decisions, you should consult a licensed professional who can advise whether your investment decisions are appropriate for you. We hope that you enjoy this week's report.
Now, let's get into a discussion about the S&P 500 and the Dow Jones. Now, you can see there, the first one, the Dow Jones, you can see the market actually broke through that 27,000 point mark, which is really positive for the US market. But since then, it's actually fallen away and it's well back below the 26,000 mark. I would have to say that it's interesting to see 38% decline from the all-time high, which is what we saw with COVID. But the market actually did recover most of that. So it was up from the low about 47%, but almost all of the decline at that point where it crossed through that 27,000 point mark, probably about 90% of the fall actually. So really strong US market there. The risk is that if the US market falls back below 23 to 24,000 points, that we could see it come back to test that low that occurred during COVID. Now, I'm not necessarily suggesting that we're going to see that, but there's always a risk of that occurring as soon as there starts to be a sell-off, and it could be quite quick. We saw last week. There was a sell-off over 6% on Thursday. The market did recover a little bit on Friday and was trading within an inside range of that prior bar. As we talked about with Jim, we saw that volatility there in the US market. Now, similar comments, of course, about the S&P 500. We saw it crack through 3,200 points to come back to close the end of the week closer to 3,000 points. So a really important level there at 3,000 points. The market actually needs to stay above that level to have a greater confidence in a rise through that all-time high. But we could see further selling on the US market, as I said, and this could push the index back further. And we could see it come back to around 2,800 points. So that's the S&P 500. Now, I have a few interesting stocks to chat about, and at least one of them I referred to in my discussion with Jim this week. The first question that we have today is from Fahad. Thanks very much, Fahad, for sending in your question. Can you please take a look at Hertz for me? I don't own and don't intend to buy, but just curious as to what's happening with the stock. It shot 100% on the day they announced bankruptcy and again shot up another 100% just yesterday, even though it's expected to delist this week. Why is this happening? Is this a case of some insider news that the public isn't aware of yet? Okay, looking at the chart there of Hertz, we can see there on the left-hand side that Hertz has already been in a massive decline over recent years. From $125.66 was the all-time high. It had come all the way back to 40 cents as part of COVID, but prior to COVID, you can see there it was actually trying to consolidate somewhere between around $12 and $22. But at that point, right before COVID hit, it traded up above the $20 mark, and then, of course, COVID wiped it out. So 40 cents is quite incredible. And looking at the share, this is the one we talked about with Jim. In the report this morning, we saw it rise 597% from that low of 40 cents to the close last week. Now, it was actually significantly higher than that. It actually cracked through the $6 mark. So the close on Friday was close to $3, and you could just imagine some investors who tried to jump in at the bottom and then were profiting from that. But look, remember, as we said during Jim's report, don't get caught up in the emotion of the market, because this could just as easily go the other way. Now, we looked at American Airlines last week, so I thought we'd take a look at Boeing. The code is BA, and see how it's travelling. Looking at the chart there, you can see on the left-hand side, the monthly chart, big fall, 80% drop over the past year or so. Now, recently it's actually traded up to, I think it was Friday, it closed at 189.51. So after having broken through $230. So looking at what's happened since, it is trying to recover. We have seen a rush to jump into the airline stocks. Profit takers have come back in, obviously, at the end of last week and taken some money off the table. But the real risk for Boeing right now is that it's a volatile space we're talking about. While travellers are actually starting to pick up and buy tickets to fly, and probably a lot of business people are looking to fly, the issue is that this could turn around if there was another outbreak. So I'd say that it's in a very fluid space. But what's also interesting is that while Boeing dropped 80% during the last year or so, it had actually fallen quite a lot prior to that. So if you look at some of the declines that we've seen in the Boeing share price many years before, that volatility has always been there. We saw during the GFC how Boeing had fallen around 73%. So this recent pullback has really eclipsed all of that. And it's important to have a look in history. That's one of the things that we teach, is always use history to help you determine the way a share is likely to unfold in future, because there are a lot of clues right there in the chart in front of you if you know how to read them. Now, a stock that doesn't need an introduction is Apple Inc. AAPL is the code. You can see there on the left-hand side of the chart, it's actually been in a long-term uptrend. So technology stocks have definitely been the favourites moving through COVID and moving forward, and I think that will stay the same. So we're looking at a stock that's traded to a new all-time high as part of the recovery, and we've seen it close at 354.77 last week. Above an important level there at around 330. Looking more medium term, given the rise, although we could see a bit of a pullback in the short term for Apple, I'd expect that it has a potential to go above $400. It's a real possibility for this share. But notice the acceleration on the left-hand side of the chart, you can see that the acceleration is getting steeper and steeper. Now, while it may be a favourite in the market, the favourites always end up being on the other side of the board and end up declining at some point. So it's important to be mindful that even a stock that goes up, as Newton said, must come down at some point. Now, I've got another stock here for you, a big pharmaceutical, Procter Gamble, always an interesting one to have. It's a Dow Jones stock, so it's one of the biggest stocks on the market. And looking at the way that it's unfolded over time, we can see that probably in the last couple of years, it's actually had a stellar rise, which has been a bit out of character to what was happening prior to that. But with COVID, it's pulled back. It's not the end of the story for Procter & Gamble, I don't think, although we could see some short-term selling in the stock. What's interesting to me is that it traded back up to almost to its all-time high just recently. Got to about, I think, 128.09 for the all-time high, pulled back with COVID, and then the last couple of months it's really been sideways. So we could see an extension of this sideways activity with a little bit on the downside in the short term. But I'd like to see the stock get back above $120 to have some confirmation that it's going back up again. So watching this stock carefully, because these pharmaceutical stocks can go out of favour at times. Finally, depending on where you like to eat, you may be familiar with the Cheesecake Factory. Well, who doesn't know about it? Now, the code is actually CAKE, which is quite cute. This is one of the shares that Jim and I talked about, and is actually a favourite of his to go and eat at the Cheesecake Factory restaurants. Looking at the chart though, and we talked about how it's not a good idea to invest in stocks necessarily that you use their products or if you eat at their restaurants. You've got to look at the price chart. Let that determine whether or not you're going to invest in the share. It's all about an investment. Just because you might get emotional and feel excited by the thought of a huge burger and fries, whatever your fancy is at the Cheesecake Factory, doesn't mean that you should feel the same way when you're looking at purchasing the shares and thinking about making a profit. So looking at the chart, you can see the all-time high actually occurred in May 2017. So again, another stock that's been in decline for some time, and COVID just managed to push it lower and potentially flush out anyone who was going to sell the share. But there's still a risk short-term on the downside while the Cheesecake Factory tightens up its belt, I guess, and manages itself through this crisis. A 78% decline to the recent low as part of COVID we saw to 14.52. Now, although in the short term the people who may have picked up the stock at that low price might be rubbing their hands together, the challenge for you is that where do I sell? Because if the stock pulls back below $20 and does so strongly, there's a real risk that it could take out that 14.52. I'm hoping that it doesn't. I'm hoping that Jim still gets to eat his dinner at the Cheesecake Factory ongoing, and that the stock eventually starts to move back up again. So we saw a 65% decline from that price that it was trading at just before COVID hit, which is interesting. So, and look, it's got a long way to recover, so that you could say potential upside, yes, but you've always got to have a look at what the upside is and measure that with the downside. Now, if you haven't got a copy of Accelerate Your Wealth, It's Your Money, Your Choice, that's Dale's book, then I highly recommend that you grab this book, because particularly in these times where shares are really volatile, it's not about buying and holding and sitting on the stock. So you may have had some shares prior to COVID that you're really worried about what could happen. You may have just bought some recently. You've got to have a strategy. That's the most important thing. And the book will give you some background information and share with you the type of thinking that you need to adopt to keep your money safe in the market. Thank you to those who posted questions. Thanks for watching until the end of the video. Now, if you have any questions that you would like me to answer, remember to type them below and I will answer them. So come on, get typing. Remember, these reports are done for you every week, so hit the subscribe button now. Click the bell on the right of it, so that way you know when we go live with the latest stock market report. I'm Janine Cox. Goodbye, good luck and good trading.